Saion Mukherjee, Managing Director and Head of Equity, Head of Research with Nomura, joins us now. Let's take our conversation forward. Nice to have you back on ET Now. Thank you for joining us. What do you make of the current market setup? Nobody was expecting this kind of a comeback in the market, this kind of a turn in global liquidity, but everything is happening for good for India. Is this a permanent change, or do you think this is a very subtle change we should not get excited about?
Thanks, Nikunj. Thanks for having me, and good morning. Yes, I mean, from the Liberation Day on 2nd of April, who would have thought, the markets are up since that day. And not only India, even if you look at some of the economies and markets which are probably most impacted because of this trade war, they have also behaved pretty okay. They are down mid-single digit in terms of US dollar. So to that extent, I think globally there has been an element of calm here. And of course, the India story and India sort of not being impacted much because of the trade war also benefited. Uh, and the fall in US dollar, which sort of led to capital flowing out of the US and finding its way into other international market, and India obviously is a beneficiary of that. So I think as of now, things look quite okay. The market construct looks quite positive. But I don't think, we are out of the woods yet. My concern would be how the economy shapes up globally and for India over the next 12 months. We still think there are headwinds to corporate earnings, and the risk premium, which actually hasn't really flared up. We have to keep watching that. So yes, I think it's good so far, but I mean, India can definitely outperform other markets, but I think we still need to be cautious and selective at this point.
Any specific reason why FIs are back? Not that I'm complaining, not that you are complaining, not that anybody is complaining, but we are simply curious to say that is there a reason why FIs are coming back?
If you look at last 6 months, I mean, for the entire fiscal 25, FIs have been big seller in Indian equities. That was a big negative year for them. And FI participation hasn't been that great. There was always complaint about valuations. And since the correction that we have seen since September has made valuations in various pockets more palatable, and in the overall global construct, right? When they are looking at allocating capital, I think India's long-term story looks much better and less concerning than many of the other economies. And I think that's the reason you see, FIs coming back. And if you had noted, towards the end of March, we were seeing big inflows till 2nd of April when we started seeing some sell-off. And I think that's now continuing because, the worst of tariff news seems to be sort of behind us at the moment.
Saion, do you not think that this FI money could be more tactical in nature purely because of the heightened uncertainties around China?
Yes, absolutely. I do feel that way, that it's more tactical than structural. I mean, in our conversations with the FIIs, I think they are still struggling with valuations for India. And I think to that extent, how much higher valuation they would be comfortable is something to sort of watch out for. The fact remains that earnings, right, are still sort of getting revised lower. It's not a major cut, but nonetheless, it's getting revised lower. And our economics team is forecasting a slower growth, which is sub 6%. So I think, though we are better off than others, but there are challenges in terms of, economic growth and earnings. So to that extent, I see this inflow more tactical.
All right, Saion, hi, good morning. This is Shrishti also joining in. But given the ongoing results season, though there were not much expectations, but till date, there's been no big disappointment rather. Give us some sense that what's been your reading throughout?
Yeah, I think, so far, the results that we have seen, in some pockets, there has been disappointment. We are still seeing earnings cut. If you look at some of the large sectors, like IT services, even banks, we are now forecasting almost 100 basis point policy rate cut by the end of this year. So that's putting some pressure in the near-term earnings. So these are some of the large sectors. Even for automobiles, for instance, we have seen commentary which was a tad muted. But as you said, I think overall it's not a major disappointment. It was, I would say, a minor disappointment. My expectation is that maybe for fiscal 26, as we go through the rest of the year, we may see around 5 odd percent earnings cut. The consensus seems to be building 15% earnings growth. Maybe we end the year closer to 10% earnings growth. So yeah, it's not a bad start, I would say, but nonetheless, earnings are either sort of holding on or a bit of a correction is what we are noticing.
Uh, one side earnings are slowing down. The base effect has kicked in, but banks are doing well. Banks do well when earnings outlook is strong, economy is expanding, earnings outlook is decent, economy needs more money. So in a contracting economy, banks should actually underperform. ये तो उल्टा हो रहा है.
See, banks, I think one of the reason is banks. The issue is that, this is one of the sector or one of the segments from a valuation perspective, I think is where the comfort is the most. And if you compare sector by sector, right, I think for most of the sectors, we are decisively or materially higher than, let's say, where we were before the pandemic. So to that extent, I think the expectations on the banking sector is relatively lower, and yeah, I mean, so that's I think one of the reason why a sector which has been a relative underperformer is going through a catch-up phase.
What about corporate earnings, Saion? And do you still think that they have a downside risk attached to them? Because, for us, for our markets, the tipping point really was that, the earnings and the valuation multiples that the market was actually attaching to companies was completely off the mark.
Yeah, absolutely. So I think from September onwards, right, the correction that we saw in the market was entirely driven by India-specific factors. So firstly, we encountered a slowdown. Post the pandemic, there was, flare up of demand in certain pockets. The government capex cycle was strong. So some of those, things started to slow down. And of course, from a monetary side, we had a tight liquidity situation in India. And in September, the expectations were much higher, which was reflected in the valuation multiple. So I think we have gone through that correction. And I think the domestic factors are largely taken care of now. At the margin, if you see inflation is down, oil prices are down, liquidity is coming back, and we are, sort of talking about lower interest rates. So I think the domestic factors are now, quite in our favor. But we are now hostage to what's happening globally, and that's the concern that we have to live with. And therefore, we think that it will have a rub-off effect on our economy and also will have an effect on our earnings estimate. So yeah, the domestic issues are largely behind us, I think. Now it's all, what happens and how things shape up globally is what we need to worry about.
Okay. Let's talk about global facing sectors. IT. They say IT is always a beneficiary if US slows down. Pharma will always gain if US healthcare cost has to come down. US is slowing down, and pharma healthcare cost will go down in US. Do you think one should have a contra approach in pharma and IT right now?
So I think IT particularly, I think, the extent of slowdown that can potentially play out in the US and the uncertainty that, is likely to play out there, we are relatively more actually cautious on IT services in particular at this point. I think we will probably see more downside risk to earnings from the current level. And if our view of a weaker dollar remains, then I think that sort of puts additional pressure on the overall earnings. As far as pharma is concerned, I think it's a sector, like especially Indian companies are participating mostly on the generic side, where actually the prices have really come down a lot. I think the issue that we sort of see with pharma is that the tariff announcements are yet pending. So we really don't know how this is going to play out. But our view is that sometimes such incidences, right, where there is a big disruption, could act as a catalyst in a positive way for the sector. As you know, the sector has been through a lot of issue for the last 10 years. Maybe this is an event that sort of helps consolidate the sector, and companies realize that after all, in generics you can also take up the prices rather than bringing down every year. So that's a contra thought I have. But till I think the tariff announcement is out of the way, maybe we will be on the sidelines. But in case the stocks correct on a tariff announcement, this that can potentially be a good opportunity to look at from, let's say, slightly longer term perspective.
All right, Saion Mukherjee, appreciate your time. Thank you very much for your valuable inputs, and certainly hope to see much more of you going forward. Let's take a break. It's a lot of green on the screen. It may not be like a powerful shade of green, but it's green nevertheless. 24,543. I mean, that's the Nifty, GIFT Nifty for you. 24,350. That's a spot Nifty for you. For a market which was struggling to stay above 22,000, it's now marching towards 25,000. What a comeback it's been in the month of April for the markets. From extraordinary fear to a leap of faith based on where tariffs are moving, that's been the story for you. In the month of May, do you sell and go away? Or we'll talk about it when we come back.